Remember when everyone kept saying that crypto was just digital money for tech nerds? Well, 2025 just proved them spectacularly wrong. With Bitcoin touching new all-time highs and institutional adoption exploding, we're witnessing the most dramatic wealth transfer in human history. But here's the brutal truth. 95% of crypto investors are doing it completely wrong.
Let's do it right.
Welcome to the Swap Space channel. Today, we're diving deep into the ultimate crypto do's and don'ts. Because in this game, one wrong move doesn't just cost you your money, it can wipe out your entire financial future. Let's address the elephant in the room. While crypto Twitter celebrates every pump, the reality is devastating. 80% of crypto traders lose money within their first year. And it's not because crypto is a scam, it's because they're breaking every fundamental rule we're about to cover. The most tragic part, these losses are completely preventable. Every single mistake that destroys portfolios follows predictable patterns, the same psychological traps, and the same security failures, and the same emotional decisions that have been crushing dreams since Bitcoin's early days. Do number 1, master cold storage like your life depends on it, because it literally does.
Literally.
I said literally.
Every single day, millions of dollars vanish from hot wallets in exchanges, not from market crashes, but from pure negligence. Hardware wallets like Ledger or Trezor aren't suggestions. They're requirements for anyone serious about crypto wealth. Now here's the harsh reality. If you're storing significant crypto on exchanges, you're not investing. You're gambling with house money. Exchanges are for trading, period. Your long-term holdings belong in cold storage, completely offline, where no hacker can touch them.
Can't track it, can't hack it, can't trace it.
Do number 2. Research like a professional investigator. Never ever buy a coin because it's trending on crypto Twitter. The most expensive lesson in crypto is learning that social media hype and actual value have zero correlation. Before you invest in a single dollar, you need to understand the team, technology, tokenomics, and real-world use cases.
Better do your research, Parker.
Here's your research checklist. Who are the founders? Are they doxed with verifiable backgrounds? What problems does this project actually solve? How does tokenomics actually work? And are there real partnerships or just marketing announcements?
These are the simple rules you have to follow.
Do number 3. Implement military-grade risk management. Only invest what you can afford to lose completely.
I never carry more than I can afford to lose.
This isn't just advice, it's the difference between building wealth and destroying your life. Crypto is the most volatile asset class in human history. 50% drops are normal. 80% drops happen regularly. Set stop losses before you buy, not after you're down 50%, and use dollar cost averaging to smooth out volatility. And here's the advanced move. Take profits on the way up. Nobody ever went broke taking profits, but millions have gone broke through holding through crashes.
Don't invest in products, invest in people.
Do number 4. Control your emotions like a trading robot. Emotions are the number 1 killer of crypto portfolios. Fear and greed don't just influence your decisions, they completely override rational thinking. The most successful crypto investors develop systems that remove emotions from the equation entirely. Write down your investment thesis before you buy. Set clear entry and exit points, and when emotions run high, refer back to your written plan. If you never stick to your plan when you're up 10x, you'll never survive when you're down 80%. Don't number 1. Fall for FOMO, the portfolio killer. FOMO isn't just an emotion, it's financial obituary. Fear of missing out causes more crypto losses than hacks, scams, and the market crashes combined.
And watching their Snapchat stories is like FOMO 24/7.
When you see a coin pumping 500% and everyone's talking about it, that's exactly when you should stay away. Here's the brutal truth about FOMO. By the time you hear about a massive pump, you're already too late. The smart money bought months ago when nobody cared. Now you're buying from people who are already taking profits, not joining a revolution. FOMO and FUD can control your emotions. We dissected them thoroughly in another video we made. Make sure to give it a watch after this one by clicking the link above. Don't number 2. Ignore security red flags. Your crypto will disappear. Your private keys are literally your money. Share them with anyone and your crypto is gone forever. No exceptions. No customer support, no recovery options. Gone. Legitimate companies will never ask for your private keys or seed phrases. Ever. Don't click suspicious links. Don't download unverified apps. Always double check URLs because scammers create fake websites that look identical to real exchanges. And also use 2-factor authentication on everything. Don't number 3. chase get-rich-quick schemes. They're all scams. If someone promises guaranteed returns in crypto, they're lying, period. Pyramid schemes, Ponzi schemes, and risk-free DeFi protocols have stolen billions from naive investors. The higher the promised returns, the bigger the scam. Be especially wary of projects promising extremely high APYs without clear revenue sources. Real DeFi yields come from real economic activity, trading fees, lending interest, or providing actual utility. If you can't understand where the yield comes from, don't invest. We've covered more than 100 different scams that happen throughout history on our channel in shorts format videos. Make sure to give them a watch on our channel to get further proof how get-rich schemes always end up in lost life savings. Don't number 4. Using sketchy exchanges. Your funds will vanish. Not all exchanges are created equal. Using unknown or unregulated exchanges is like leaving your money in a dark alley and hoping it's still there tomorrow. Stick to reputable, regulated exchanges with strong security track records. Research the exchange's history, security measures, and the regulatory compliance. How long they've been operating, have they ever been hacked? The extra 0.1% you might save in fees on a sketchy exchange isn't worth the risk of losing everything. Don't number 5. Panic selling during crashes. The wealth transfer trap. Crypto markets are designed to transfer money from the impatient to the patient. 50% drops aren't bugs. They're features. They shake out weak hands and create opportunities for those who understand the game. Every crypto bull market is built on the bones of panic sellers who couldn't handle the volatility. Whenever Bitcoin drops significantly in price, smart money is always there buying, while retail investors were capitulating.
Are you ready to capitulate?
Parish forbid.
And remember, knowledge is the only edge that matters in crypto. Now, the crypto revolution is real, but it's also ruthless. It rewards the prepared and punishes the reckless with equal brutality. Every rule we've covered today has been written in the blood of investors who learned these lessons the hard way. Security comes first, because without it, nothing else matters. Research comes second, because ignorance is expensive in crypto. Risk management comes third, because survival is more important than success. Emotional control comes last, because it determines whether you keep your gains. The biggest winners in crypto aren't the smartest or the luckiest, they're the most disciplined. They follow proven principles while others chase shiny objects. They think in years while others think in days. They build wealth while others build regrets. As we move closer to the end of 2025, remember this. Crypto is the greatest wealth-building opportunity in human history, but only for those that trade it with the respective demands. But what do you think? Which of these crypto don'ts do you see destroying the most portfolios? Have you fallen victim to any of these mistakes? Let me know in the comments, because your experience could save someone else from making the same costly errors. If this video helps you understand the real rules of crypto success, smash that like button. And thanks for watching. As always, stay curious and stay safe.